Well, good afternoon, Maverick traders. It's Joe. It is the 21st of May. Let's get into a market roundup. You guys know how this works. Make sure you take responsibility for the outcome. I'm going to get into the news of the day, any sort of technical analysis, and as always, share trades with the community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Moving into our market analysis, you could see that this optimism in the markets has continued. I just want to jump straight into the daily news. Last week's CPI numbers seem to really just kind of take off. You're going to see this in the chart. We saw the PPI a little bit higher than expected, and the production price index is usually a little bit lagging. We did see a couple of things that showed inflation, some slowdown in manufacturing, and a little bit of a slowdown in even retail sales. But we got that CPI number that came in line, and these markets gapped up and just surged higher from Thursday and have been kind of floating up ever since. Lots of Fed speak this week. We do not have a lot of things going on economically when it comes to announcement that can either agree or disagree with the sentiment, but the overall motion of the ocean, folks, is bullish, and it has been for quite some time. How do we finish? The Dow, the S&P, and the Qs all managed to come across a little bit higher. The Russell's flat. Oil and gold subsequently lower as they kind of take a pullback when the overall markets move. Advanced decline line, 45% advancing, 51% declining. Above below the 50-day moving average is 32.68. So once again, we really haven't seen too much since Thursday of last week. After that CPI number, kind of like a push above resistance levels into all-time highs. You guys have probably seen the news headlines, the Dow playing with the 40,000 mark. Okay, well, what do we do from here? Well, there's not a lot going on. Volume has definitely subsided, but there is no fear out there. Here is the SPY. Let's take a look at it. And as you guys can see, this is that break I'm talking about on Thursday. This was a CPI number that came in line. Understand, it's not lower. It's not great. It was just in line with expectations, showing that inflation is still apparent, but at a rate that is expected. The idea of economic worries versus exuberance of markets is a big difference. Now I'm just going to go ahead and try to extend this box all the way down, and you guys can see that this actually correlates with a volume that's, it's decent, it's okay, but there is complacency, there's comfort, there is optimism in anything that these markets seem to do. So sentiment is still to the plus side. That's why we stay to the plus side. Are these markets extended? We can make the argument all day. I can talk to my bears all day, and they can tell me why these markets should be down, and I agree. However, it's not going that way. Optimistic wise, there's really no reason to sell. If everything seems to be growing and expanding and the markets are okay with inflation and investors are still willing to put money into the markets, then hey, price action will always take precedence over fear and worry. The Qs are pretty much going to be the exact same thing, just a little bit different. They are a little bit more volatile, as they are going to react quicker and they're going to move further. So I'll go ahead and see if I can draw this box here. Here's that Thursday CPI report. It looks like everything's great. Not a lot of volume and participation over the last little bit, but once again, no fear, no worry. There's complacency. Why sell? There's no reason to sell. Sure, there might be all sorts of arguments of why you should not buy these markets, but guess what, folks? They are still floating higher. The most important thing I should say that we should take from these last few days is do not be a bear here, please. Don't. If you don't want to buy the markets, great. You can take a step back, maybe lower some of your exposure when it comes to your portfolio and the expectations of it. I've done a lot of coaching sessions as of late where traders say I should be 5 to 10 trades right here, but I don't want to put any trades on because I have reservations of where these markets are. Okay, that's a personal opinion. And it should be part of the plan. That's great. You do not have to push buttons. You do not have to be exposed if you are not comfortable. But these markets are indeed glass half full. The sentiment is absolutely bullish. If you like it, great. If you don't, let's just step away. Let's take a look at the heat map here. What's going on? Mostly some of the larger companies moving higher. I think the biggest thing that I'm going to talk about today is this NVIDIA. I should say this, it became the market icon, and it's not its fault. It's the fact that it's the focus. It's the leader of the AI. It's been all over the news. And it's kind of funny, folks, how things can become a catalyst without asking to be a catalyst. It's got its earnings coming up here. I believe it's tomorrow, actually. So we'll see. But I don't think these markets skate without some sort of reaction. All that being said, folks, it's pretty much a flat day. We got push and pull. We've got extensions. We got pullbacks. We got bull. We got bear. It doesn't make a difference. The overall sentiment is absolutely to the bull side. Let's jump into the outlook. And I am doing this based off of our technicals. We are a +2 on the weekly outlook, and the idea is we did get this crossover. Here is this crossover. We do have a bullish sentiment when it comes to price action, and we absolutely broke above resistance. So we definitely have to go to at least a +2 here on the week and a +3 overall. The extension could warrant the conversation of a little bit of inhibition. And I do this a lot. I talk to you guys about hey, if it's overextended, it's okay to drop this maybe to a +2 or drop this to a +2 or a 0. Fine. Understand that's going to be your outlook based on the approach that you have when you come to balance your portfolio. However, where these markets are at, they're showing resilience, they're showing strength. And so I'm scoring them based on what is in front of us. Either way, if you guys think these markets are overextended or they are super bullish, I've got a couple of trades that are a little bit more reserved. I don't have a whole lot of trades going on here. I've got a couple of bears down at the bottom. I've got one bull on the top that I thought was pretty interesting, which once again is kind of a flight to safety when it comes to Newmont. But let's take a look at the trades I've got. I do love this ascending triangle. This is a stock that has been showing a lot of resilience through most of the kind of the tumultuous markets here. But I think what happened is, and this kind of, it caught me off guard. I really liked this bull pullback, but then, yeah, it had a huge gap up. It had its earnings. It was in the right sector at the right time. But what I started to focus on, folks, once I had that announcement and I saw that, was the previous resistance that it had at the end of last year. And it looks like it's comfortably kind of pushing above it. Now, this doesn't mean that it's going to be a +3, but definitely a +1 for me, maybe a 0 to +1 moving forward. I do like it as far as a flight to safety, and it's actually participating in some of the strength of the markets we've seen. So we're taking advantage of the bullish sentiment, and for me, we're also in kind of a protective sector when it comes to Newmont. So let's move straight over to our bear, because I don't have anything on the sideways. Everything's kind of going down or up, and this is UPS. What I liked about the UPS is it's just kind of rolling over, and it did have a couple announcements. It did have some news on it, which does make it easier to pick on, right? All right. So what I'm looking for is kind of this area. I'll go ahead and draw my box here. I did like the fact that it did set that lower low, and it is slight from that pretty big move to the downside towards the end of March there. But it does have a nice slope when it comes to lower highs. A little bit of a consolidation through this area here, about the 150 area and the 145 area. Now, this volume is kind of picking up. I'm going to be patient with this, and I'm not going to target this immediately straight to the 142.20 or 142-ish. But this is going to be more of a diagonal sideways play. And the whole reason why, folks, is because of what? Well, because the sentiment is to the bull side. So if you want to do some bearish hedging, absolutely, that's totally fine. Find some underperforming stocks, underperforming sectors, and throw some stuff out there. But please don't go -3. This is not the market to do it. But a 0 to -1, it makes sense to me. I can totally get behind it. I wish I had more to give you, folks, but once again, this is a pretty good market. I mean, that has been resilient, bouncing off of a higher low, and it's showing some strength. So the sentiment remains optimistic based on price action and economic reaction. It was interesting that the PPI was pretty hot, and retail sales actually slowed down, and manufacturing was showing a retraction, but that CPI number came out even. This wasn't a lower CPI, it just came in flat, and boom, the markets moved higher. A lot of Fed speak this week. We don't have much economic-wise. Home sales, jobless claims, durable goods. Yeah, they're all going to come out, but those can all be debated. So there's not a lot to go off of. Let's just let sentiment kind of play itself out. Just be aware of NVIDIA. Like I say, it's a giant company and it's very, very focused on whether or not it does well, and what it does has nothing to do with anything, but it will carry with it a massive amount of volatility. So if you're up or down or sideways, just kind of stay out. Make sure that you're ready for it. So that's all I got here for a Tuesday. Thanks, guys, for joining me, and we'll talk to you next time. Bye, everybody.